Hi everyone. So, um, a lot of people has asked me, "What's your edge in trading, or what made you a successful trading?" From so initially, I started as a trader. I had a lot of losing period. I mean, I struggled for maybe nearly 8 to 10 years. Right, that's a long period of time. I struggled with my trading, and what changed my trading is my understanding about risk. Um is my ability to take a stop loss, right? That's what made me survive this whole journey. So I started many years back. Um, I was on and off in trading, and I always respected risk, right? As a person, I always had a good risk management practices. So all these years, I managed to maintain my account just because I was a very risk averse person. I was a risk averse person. I never I never really violated my rule of taking a stop loss, right? That helped me stay in the game for a long time and eventually turning profitable. And when I started figuring out things which are important to trading other than risk management as well, and one fine day my profitability increased, right? That's what happened to me. So I just want to talk briefly about the importance of stop loss. If you are a new trader starting, start with your stop loss, nothing else. You don't need a strategy. You don't need uh, indicators. You don't need high paid subscriptions, chart reading skills, any of those things. You start with managing your risk, right? That's a simple thing you need to do. The profit will come. I guarantee you, the money will come. The profitability will come over time if you stick to this game. If you respect risk, and one point of time, you will start seeing progress. You will learn how to take good trades. You will learn how to run trades. But all is possible only if you respect risk, if you manage the risk, right? So the importance of stop loss, right? That's the only real edge any retail trader have in this market. The ability to take out your position the moment your theory of entry, your thesis of entry is violated. You take out your trade, you save your capital, you reanalyze the situation. If the market provides you with a new opportunity or a re-entry opportunity within the same stock, go for it, right? But always respect your stop loss. So, I mean, it's a game of survival. So, um, what stop loss does is basically it helps you to protect your capital at what cost, whatever cost, right? So for initially when you're trading, limit your risk to 0.5 percentage of your account per trade. Don't risk more than 0.5%. And when you're comfortable, when you grow, when you start traction, maybe increase to 1%. I would never recommend anybody to go beyond 1% of your account in one particular trade. Simple rule, follow this to the core. uh, you will survive this game, right? Once you ingrain this in your mind, once you start following this one principle, everything around that, right, start working. You will start identifying good trades. Even if you take a few bad trades, you are not going to lose a lot. 0.5 percentage, if you if you make 10 losses, that's just 5 percentage of the account, right? Yeah. So a stop loss, when it hits, is basically it frees you emotional. It gives you an emotional peace, right? When you are in a trade, um, you're basically in a state of mind where you always want to see that trade working. You always want to see that the trade to be going higher and higher. But when it starts coming down, if you don't have a stop loss, you are emotionally tied to that particular stock, and you're always thinking whether did I made the decision right, Was it a right decision to enter the trade? You always have this thought process um, in your mind. But the moment you enter a trade, put your stop loss. Once it hit, get out of that market. Don't think, don't move your stop loss, don't do anything. The moment you enter a trade, within a minute, put your stop loss, move away from the screen. Let it do its work. If it hits stop loss, be happy, man, be happy. That's the good thing. You are getting out of a bad stock. Your money is freed, your capital is freed. You can then look for your next opportunity. You look for the next opportunity, you enter that trade. Maybe it will work, maybe it does not work, but you improve your chance of winning. That's what a stop loss does you. If the there is an asymmetry to the math of loss, right? So think about this thing. So if you are trading $100,000 account, and suddenly there is a 10 percentage drawdown, so you bought a few stocks, the account starts dropping, there's a 10 percentage loss. Your capital become $90,000. If you need to recover back that money, you you are not going to make you are not going to need another 10%. It's actually 11.1%. It's still manageable if you're having a 10%. But in order for you to just to get to that break-even point of 100,000, right? Your capital break-even point, you need 11.1%. The moment your drawdown starts increasing, the asymmetry gets even bigger. So if you lose 25%, you need to make 33%. The moment your account drop 50%, you need to make back 100%. Let that just sink into your brain. This is the most important thing. If your account ever drops 50%, you are, in order for you to just to break even, you need 100% return on your capital, not 50%. This is the most important thing you should always remember. Cut your losses. Cut your loss. Never. I mean, I will never have my account drop below 5%. I always have a portfolio risk of 5%. If my account have a drawdown of 5%, out of all the trades which I have, no questions asked, I will reanalyze the situation. I will come back to the market at later point of time. That's me, right? Maybe the market environment is not right. You don't know. The market thesis might have changed. You need to go back to the market with a clean state of mind. You need to go to the drawing board with a clean state of mind. Start thinking, start analyzing, and then come back with your trading strategy. Think, understand what has gone wrong, but exit from the position first. Don't keep thinking that this is going to come back. I'm going to save this trade. This trade is going to drop a little more, or maybe if it has already dropped like 10 percentage, you might be thinking, oh, there is a support at 12 percentage loss. It's going to turn over from there. It's going to be a fake out. No, don't do all those things. Get out first, get out and think later. And that's the only thing I have to tell to anybody who's going to trade, anybody who wants to do trading, anybody who wants to learn to do trading, anybody who wants to grow as a trader. Fix your risk, fix your stop loss, identify ways where you can reduce your stop loss percentage. If you're now trading with 8% average stop loss, and go through your trade, analyze your trade, find ways where you can downsize your stop loss. I think what will happen if you reduce your 8% to 4%. How much, how is it going to, how is going to um, affect your overall profitability? Is it going to reduce your, if you reduce your risk to half percentage, half of what you're risking now, like example, if you're reducing, if you're risking 7%, if you drop your stop loss to 3.5 percentage, is your winning rate going to drop half as well? Most probably, in most cases I have seen, it's not the case. So do that analysis, journal your trades, go through your trades, see what reducing your stop loss makes to your overall trading profitability, right? If you risk a 3.5 percentage, you only need the stock to move 7 percentage for you to get a 2-hour trade, 11.5 percentage to get a 3-hour trade. In the same case, if you are using a 7 percentage risk, you need 14 percentage and 21 percentage for you to get an R multiple of 2 or 3. Think in terms of R multiple, right? These are the clues. Go through your journal every trade, go through your past trades, find ways where you can improve your risk, reduce your stop loss. The profitability will come. The just one change in my stop loss. I mean, initially I was risking 7 percentage. Then going through my trade, I realized there's no point having 7 percentage. Why don't I try 3 percentage? That increased my profitability to exponentially, right? So, but I made that decision based on data. You need to collect data point. You need to understand what's your risk, what's your trades looks like, and from there take your decision. Okay, always to have your data ready, prepare data, use the data, be a data analyst, not a trader. Be a data analyst. Okay, all right. Thanks everybody.